Hello friends, my name is Dr. Bharath Chandra. Videos are meant for the benefit of society. Today's topic is 14 monopoly shares. Some of the factors we need to see when investing in stocks are financials, products and services offered, management and future growth potential. There is one more important factor called competitive advantage or moat. It means that every good company must have some quality that other competitors cannot replicate or cannot easily copy. This will give the company an advantage and help it to earn higher profit margins and enjoy better growth in their business. The bigger the moat, the more protection the company has from its competitors and new companies entering the sector. Examples of competitive advantage: strong brand name, special regulatory permission to produce and sell certain products such as patents and trademarks, and unique business model. Monopoly market means that there is only one seller of a particular product or service. In India, in many sectors, there are dominant companies. Many of these companies have been market leaders for more than 30 to 40 years. We have compiled a list of some of the market leaders in their respective sectors. Some of these are almost like monopolies. Please note that this video has been made for information purposes only. You will need to do further study before you can take any investment decision. Now coming to the high market share companies. Asian Paints market share around 50%. Sector is decorative paints. ITC more than 75% in cigarette sector. Eicher Motors more than 85% in 250cc bikes. Colgate more than 50% in oral care products. Pidilite more than 65% in adhesives. IEX more than 90% in power trading. Maruti Suzuki around 45% in passenger cars. Nestle India around 90% in baby food products. Continuing further, CDSL around 60 to 70% of the demat accounts. GMM Foundler more than 50%. Glass lined equipments. IRCTC 100% market share in train ticket and catering, and Lakshmi Machine Works more than 50%. Textile machinery. Symphony more than 50% in air coolers, and Zydus Wellness more than 90% in sugar-free products. If you want to make money from stock market, you must know fundamental analysis, technical analysis. As far as I know, there are nobody who is conducting workshops in Canada in a structured manner starting from ABCD. And large number of people keep asking us, when is your free webinar on your 3 months online Canada stock market course? For that matter, we have organized an introductory webinar, that also in Canada, on 3rd July Sunday 10:30 a.m. to 1 p.m. And to get the link for this online webinar, you must send an email to successdigest@gmail.com, your name, mobile number, and the subject column should say Kannada webinar. And once you come for the webinar and sit with patience and learn all the details, and that is the time to join the paid workshop. Large number of people who join our workshops always tell us it is too late, I should have joined the workshop at least 10 to 15 years earlier, because they are losing the power of compounding for those years in order to create a huge wealth for retirement. So, if you have heard about this webinar today or heard about Dr. Bharath Chandra today and you have not attended the webinar and you attend the webinar after 10 years, surely you will feel repentant. Now the observations. Number 1. If you check the 10-year returns for most of these market leaders are between 13 to 30% per annum. There are only certain exceptions where 10-year returns are in single digits. Number 2. Usually a market leader in a growing sector will always perform well. If the sector is quite saturated, then the returns may not be very high even for the market leader. Number 3. Money compounding in the long term by even 15 to 18% becomes a huge sum in 20, 25, 30 years. Investors who don't make money in the long term are usually people who did not invest for longer periods and who bought inferior companies. Number 4. This is a good opportunity to research on some of these companies and understand what is their business and their potential. 5. Generally speaking, there is additional safety in market leaders and monopoly companies. Number 6. Some of them are monopolies because of certain regulations and government policies and can lose their market share due to change in government policies. Classical example, IRCTC. Now finally, at the end of this video, we have a question for our survey. Do you own any company with high market share in its sector? If yes, type the name of the company. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, video is good, press the like button, send this video to large number of your friends. Thank you for watching. Bye bye. All the best.